It's 17th of December 2013. This is a pre-Christmas market update from HGCA. Grain markets are actually quite unusual at the moment. They're actually showing a period of calmness, a period of which hasn't been seen for quite some time. Relative flat price activity for about 6 to 8 weeks now. It's expected that this calmness in the price won't last. The expectation that volatility will return at some point. The trouble is nobody really knows when that volatility will return. This presents quite an opportunity for players in the marketplace looking to take some price protection. The cost of options, price insurance has actually reduced dramatically as volatility is reduced. Looking to November 14, the cost of an at-the-money option now seems to be well below £10 per tonne. In terms of the actual grain prices for 2014, these are currently seen to be somewhat of a discount to the spot market prices or the futures prices for May 14, partly because for the new crop, for the coming harvest, the harvest of 2014, the UK is expected to become more active in the export market as there seems to be more of a normal wheat area for the harvest. Looking ahead into 2014, there are some key factors to watch out for. The market is now got its full attention on what's happening in the southern hemisphere. From a wheat perspective, the harvest is well underway in Australia and Argentina, an improving picture really for the Australian crop on last year, and that's expected to bring some much needed supply, particularly this season, as China is a key buyer of quality milling wheat. In the northern hemisphere, winter wheat crops are now generally well established and good snow cover where it's needed, particularly in the former Soviet Union, so there's no real crop risks seen there. In the US, weather conditions this year are much more favourable than they were a year ago. Certainly no real drought concerns as were seen a year ago. All in all, this is giving quite a comfortable sentiment to the marketplace, no real cause for concern at this point, but as we know, this is a very early stage in the growing season, and so as we get into the spring of 2014, it's going to be all to play for, and we're going to see weather really being a big player in terms of its influence on price. Back to the current season, and what we're seeing is a real firm demand for global grain, largely as prices have reduced year on year, partly because of some quality issues around the world, particularly in China. China's a key player in key commodity markets, and particularly in grain and oilseed markets. At the moment, there's a bit of tension between China and the US around non-approved varieties of GM maize found in cargoes. That's potentially causing a bit of conflict, but the current global demand for commodities really underpins the need for good trade politics. From a UK perspective, with the largest crop in 15 years, barley exports are going to be a really important feature this season. They started the season on a very strong note, but going forward, it's uncertain as to whether that pace will be maintained, and probably unlikely that that pace will be maintained as the competitiveness of UK barley, particularly outside of the EU, looks to come into question, particularly as we see the Australian crop going forward and Argentine crop as well. On the flip side of that, the UK is going to need to import quite large quantities of maize to make up for the low levels of feed wheat availability, and it's likely that we'll see quite high levels of maize imports in the second half of this marketing season. Longer term, we should expect volatility to return, and so the need for risk management strategy remains of utmost importance.